Hello, welcome to Eric Manda Capital. Yet another good session you're having, and today we are going to learn about the Fibonacci tools. To be specific, the Fibonacci retracement tool. The Fibonacci retracement tool. So let's start right away. Fibonacci, we use the Fibonacci to determine where our entry will be and where our exit will be when we trade, or rather where to place our entry and where to exit our trades. So I'm going to come right over here. The Fibonacci channel, Fibonacci retracement. I'm going to take my pick as this one, and I'm going to draw it up to this point here, this level here. You can see this level, yeah, and this level too, yeah. There's some very few picks up there, which forms actually our resistance and our support. This becomes our support and this becomes our resistance. Essentially, why we are putting that from here to here, that's the reason. So in a diagram like this, we know the markets are in a ranging position, are in a ranging market, or rather in a ranging structure. So once we've seen this point here and this point here, once these 2 points are formed, then we draw our Fibonacci, yeah, assuming the graph was maybe up to here, yeah. So we draw, these are starting point, these are end point, and so the best place to enter will be around 61.8%, or rather 0.61 or 4.9%, in between to 4.17%. Yeah, so let's put another horizontal. We're going to change the color of this one. So in between here, let's put it green, is where we are going to make our entries, and also we're going to see where to exit. Oh, sorry, these are not full. I wanted full horizontal line. I don't know why that. Oh, that's array. I wanted full horizontal lines like this. Another one. Yes, so we change the color to green, and then this one to green. So the green levels here, from here to here, actually now shows us where to enter our trade. Yeah, assuming now we left it was at this point, and then we left it, we drew our Fibonacci retracement tool, and then we left it, so the trend will be still on a sell. So if I entered right around here, that's 4.96%, still in between our green levels, and exited at our green level, I will have made almost 0.7% on Euro USD, yeah, in a span of like 3 days. Yeah, so that's how you can do your entries. So after you have entered, you can hold it, you can get out here, yeah, or even on the green line here, or you can wait for another reversal, which will be in between here, and then you place your trades here on this nice consolidation. We call it a consolidation point, or a concentration point. You put your trades here. You may put it on at the top of this candlestick or at the bottom, yeah, and then you now wait for some good pips, 5%, which is almost 2%. Yeah, in how many days? In 1, 2, 3, 4, 5, almost 6 days. So almost 1.25 week, trading week, that is. So let's move to the next one, to the next example. So assuming now you've made this graph after it has gone up, now it's on its way here. Yeah, and you can see that we have our resistance point here. So we start by taking our Fibonacci retracement level from this point up to that point, and then we take our horizontal, and then we put it in between 61.8 or 0.618 on this one, and 0.32 just right over there. Now this will be our level. So you can see when it retraced a little bit, reverse a little bit, it climbed up to 0.618. 0.5 is actually what we call the golden ratio in Fibonacci. The golden ratio in Fibonacci. That's the 50% or 0.5 point, which is very good in entry and also in your exits. Yeah, so something like this, I would have entered right around here, and then wait for a good decent get out here before it starts to range, and then breaks out of this ranging level, or this our entry levels here. Yeah, so the green levels here denote our entry levels, where we should enter after this graph has reached right around this point. Yeah, now we wait for retracement to the golden ratio, or rather in between the 61.8% or 38.2% on this Fibonacci, which is 0.618 to 0.382. Yeah, those will be very good sales. You can see it actually gave you 0.59, actually gave you almost 4%, 0.9 something percent, almost 4%. Let's look at another one. They are actually a lot of them. Assuming we got this one right over here, we take our Fibonacci retracement, place it there, and then our good entry points will be in between these levels, 0.618 and 0.382. okay, and you can see when it fell down, it actually retraced up to this point, even this point here. You can see it's actually on the level. You can see also on the level. Yeah, so it's all really a matter of patience and waiting for the right pattern to form, for the right pattern, the right entry. Yeah, another one will be this. I think we'll do this as our final one. Take our Fibonacci, assuming now you have made the market, it's already done that, it's here, it's at this point here. We take our starting point here and our end point here. Yeah, so when it's right over here, you now anticipate that it will reverse at these points, and which it has done exactly that. Fibonacci, when you use Fibonacci, it's so accurate. Yeah, it's used in so many other areas. It's even used as a growth pattern of bodies. It's even used in architectural designs. Yeah, it's used in so many others. Very, very accurate. Yeah, so a point like this, my entry would have been here, or if I miss here, I wait until it reaches here. Okay, so still on the green level, only that it has made a false breakout. Remember we talked about false breakout? Yeah, it has made only a false breakout here, and then it goes back down, and then it eventually breaks our entry level again here, goes down a whooping 2%. Yeah. So let me take even this one. This one is a little bit weak, but let me take it as our last one. Assuming now the markets, you've made the markets at the bottom here. Regardless of whatever time frame you use, it's still going to be a Fibonacci. So we take our horizontal to mark our entry points, and this other one to mark our entry point on this one. So essentially, when we made the graph here, we would have waited for a slight reversal. You see, up to our entry points, which is in between these two green lines. That is in between 0.618 and 0.382, and then we'll put our sell entries here and then wait for a good bearish momentum, which would actually give almost 2%, 4.5, almost 2%, yeah. So let me look at the reverse Fibonacci, the one detecting that shows the bullish momentum. We take our Fibonacci, and now we are assuming that our market is exactly here. So we take this point and we mark it up to that point. Yeah. Now we take our horizontal lines. We mark our point of entry, which is, remember, 0.382 or 38.2%, or 0.618, which is also 61.8%. So our entry is here. Look at it. It went reached our peak here, then fell, in fact almost broke our point of entries in between these ranges here, but reversed and gave almost how many pips, because we will not enter here, but we could have waited until it broke again here, which is 2.2%, which gave almost 5%. Imagine 5.3% right over there. So this is the Fibonacci retracement tool. We are going to look at more of the Fibonacci tools and how we use them to trade, how we use them to make our entries, and how we use them to make our exits. How you can also use them to set your take profit and also your stop loss. Yeah. So for now, that's the end. You can follow us on Facebook at Eric Mwenda Capital, at Twitter at eMwenda Capital, and also you can leave a message at our website, which is www.ericmwendacapital.com. Cheers, guys.